Okay, welcome back. We were just about to do the proposed dividends part of this working, so I needed to get myself some paper because there's some workings to be done here. And if we just, first of all, before we start, to just talk about ordinary shares and preference shares a little bit. So, ordinary shares are one type of share that somebody can buy in your company, and preference shares is a different type of share that somebody can buy in your company. Now, the difference is, strictly speaking, ordinary shareholders are the owners of the company, whereas if you buy preference shares, you don't get the same ownership rights as ordinary shareholders. So that's one thing. But when it comes to the reward that shareholders get, the share of the profits that they get, if you like, from buying shares in the company, the way it works is that the preference shareholders get a set amount, a fixed amount. In this case, 10% of whatever whatever they paid for their shares in the first place. So if there's 160,000 worth of shares, the preference shareholders should get 16,000 or 10% of that every year. Okay, the ordinary shareholders, when they're paid out dividends, they can get whatever the company directors decide to give them. They can give them zero, they can give them a small amount, they can give them a large share of the profits, whatever they decide. And usually they decide based on what's best for the company. Should we give the shareholders a little less this year so that we can keep that money and invest it in new machinery so that we can make more profit next year, and maybe then give them higher share of profits. So these are the type of things. Now, the ordinary shareholders don't mind so much about maybe receiving less in dividends if it's for the good of the company, because they are owners of the company, and if the company is doing well, ultimately the value of their shares will go up if they want to sell them on in the future, and they will make higher dividends in the future. So the rule is, I guess, that the preference shareholders need to get paid no matter what. So if you have some profits to share out, and if you have enough profits to cover the 16,000 that you should be paying the preference shareholders, then you must pay them first. Whatever is left, then you can decide, I'll give some of it to the ordinary shareholders. But the preference shareholders get paid first before the ordinary shareholders see anything. Okay, so here is the thing. Let's just have a look at what they said down here. It says halfway through the year, 1st to the 7th, 2005, the ordinary shareholders received an interim dividend of 21,000 and the preference shareholders received 8,000. So 21 and 8 gives you the 29,000 that we see up here of the interim dividends that were paid already during the year. Okay, but the directors have decided that payment of the preference dividend due and a final dividend on ordinary shares to bring the total ordinary dividend to 15 cents per share should be paid for this year. Now, it hasn't been paid yet, but because it's for this year, it will go into our profit and loss account, and then it will go into, if we were doing a balance sheet, which we're not doing at the moment, it will go in as a liability, or creditors' amounts falling due in less than 1 year or within 1 year, because we'd owe it to the ordinary shareholders and the preference shareholders. So here's the thing. Let's look at the figures first of all. The preference shareholders should be receiving 10% of 160. That's what they should be getting in a year. So if we work out their figures first, 160,000 by 10% gives 16,000. This is what they should be getting in the year. So we've already found out that according to this, they received 8,000 in the first half of the year. So it means they're owed a further 8,000. So they got 8,000. So they're owed another 8,000. So the proposed dividends should be composed of, first of all, that 8,000 to pay the preference shareholders what they're due. Okay. The second part of it is, it says, the directors propose to bring the ordinary shareholders up to a dividend of 15 cents per share. So pay whatever else they have to do to bring their dividends in total up to 15 cents per share. So if we look at what we've got, we've 300,000 ordinary shares. If we multiply that by 15 cents for each of those shares, I'll just do that in the calculator. That's 45,000. The directors have proposed that we pay whatever we need to pay in order to bring their total dividend up to 45,000. So we've seen here already that they have received 21,000 so far in the year. So what their due is, if we take the 21,000 from that, they're owed another 24,000. Okay, so we're proposing to pay another 24,000 to the ordinary shareholders, another 8,000 to the preference shareholders. So 8 and 24 is 32,000 in total. We're proposing to pay all of our shareholders. So dividends proposed 32,000 there. Is that okay? So once we have that done, then we subtract that from our profit after taxation. And let me see, so it's going to be 260. So that's 11. We're going to have 139, isn't it? Okay, 139,260. So that is our retained profit for the year after having paid our tax, given our shareholders a dividend. We've got this left over from our profits that we're going to retain. We're going to keep in the company and use to maybe expand the company in future years. But on top of that, then we always have to look over to the trial balance here, and we see profit and loss balance at the start of the year. So this is the profit or loss that we're carrying forward from last year that we're going to add to this year's retained profit, and it's 78,000. Now, what you need to know, and is very important in this question, is they will not say whether it's a profit you're carrying forward or a loss. They just say it's a profit and loss balance, and you must know based on which side of the trial balance that figure is on, whether it's a profit or a loss that you're carrying forward. Because it's on the credit side, it's a profit that you're carrying forward. So 79,000. So was it 78 or 79? Huh? 78,000, excuse me. 78,000. So we're going to add this year's retained profit to that profit we were carrying forward. If it had been on the debit side, we would be subtracting it because we'd be putting a plus for the year with a minus that we were carrying forward and seeing what our net amount we're going to carry forward at the end of the year is. So in this case, though, they're both plus figures or profit figures. So we're just going to add them together as normal. 2. So 217, 260 is our profit carried forward at the end of the year. Okay, and that's it.